Good evening, folks. Welcome to the MarketsMojo Master the Market series. My name is Kevin Vincent. I'm part of the MarketsMojo product team, and today I'll be taking you through all the premium services that we have in place. So, at the end, I'm envisioning that you are very well equipped to completely take advantage of all the services that we have to offer. And in case you're a new user, and in case you're an unpaid subscriber, basically you kind of get to see Markets Mojo in all its glory. And if you can, if you feel convinced enough, climb on board with the other paid clients who are kind of happy with the services. Anyways, before we get started, I'll take you to the disclaimer. We emphasize that all investors should use the information on the webinar merely as a resource to enhance their own research and understanding. Nothing discussed in this webinar should be considered investment advice. We strongly advise all participants to check with certified experts before taking any investment decision. Investment in securities is subject to market risks. Past performance should not be construed as a guarantee for future returns. Investments in equity and equity-related securities involve a high degree of risk, and users should not invest unless they can afford to take the risk on their investments. All right. So let's get started. We'll do something today that often, in the equity side of things, often a lot of people don't do clearly, is research. I think you would have seen the new ads that are rolling from MOSL. Three things you need to do is research, right? So we'll do that on our platform, and the best thing about our platform is we cover all listed companies. So it is not just the top 200, 300 companies out there. Rather, we cover all the listed companies, and it is only possible because we are covering it because it is completely automated. There is no manual intervention that comes in. Now, oftentimes what we have noticed is that, and even you might have noticed this, is that a lot of investors often fall prey to biases, emotional biases, right? So the three classic examples of these biases, first one being FOMO, like fear of missing out. Your friends telling you about a company that, he's talking about a company that, he's really hyping it up, and the price momentum is there for the company, that some guy in the news channel is also talking about it. So you, in order to not miss out on the momentum, just climb on board and just, take the action without doing the proper research you should. In which case, a lot of people that's fear of missing out, and, blindly people invest. A lot of people did that and made some money, but of course lost a lot of money. This is the .com bubble that I'm referring to here. The second, the bias that a lot of people suffer with is I'll just describe it first. So basically, let's say in this case, in this very same example, the person basically goes ahead and does the research. Now, मैंने research कर दिया, and I put some sizable amount in. Now at this stage, I'm looking out for new pieces of information that comes in. Let's say some news information comes in and it is invalidating my view. मतलब मैंने खरीदा है तो बता रहा है कि company is not going to do so well because of so and so reason, उसका license निकल गया या whatever. So I will start discounting यार कि not giving much importance to these kind of information, but and also would start so I'll start ignoring all those information, and whatever pieces of information, however credible it is, not credible, I will start giving importance to those information that actually confirm my view, and hence confirmation bias. So you're really giving importance to the pieces of information that kind of goes with your view, and often tend to ignore in pieces of information that kind of goes against your view, right? So these are some of the biases that are basically, you might not know the proper term for it, but everyone's been through it, and that's how it is, right? So these are the two major biases. I will talk about biases later on as well, but I'll just head straight in. So our approach is purely a quantitative one. So we are looking only on the data side of things. So our approach essentially cuts through all of these biases and just gets straight to the point. What is the numbers telling us? So let's say we want to learn about in rectifiers. Okay. Okay. So now basically, in case you didn't realize how I got to this page, go to the search button, search for the company, and you get to this stage. Now we evaluate companies based on four parameters, four dots rather. It's one dot, second, third, and fourth. Now I'll explain the colors and what these dots represent. Starting off with the first dot is the quality dot. The quality dot represents now the quality factor represents the long-term fundamental strength of the company. So we are looking at purely from a fundamental perspective or long-term perspective how the company is doing, and it is based on these three factors right here. First is the management risk, second is growth, and capital structure. No, I clearly spoke about all of it. All of our analysis is completely quant based. We are not really looking at any subjectivity. There is not a lot of subjectivity that goes in. There is none actually. So what we do here rather is, instead of looking at the who is behind the company for the management risk, we are looking at the outcome of the management in the form of the ROE and ROCE. Right? You can see these factors right here, ROE and ROCE. I'm sorry. It's minor. I think I just went back. There we go. Okay. So. So now the second factor that it is based on is a growth factor. The growth factor basically it is trying to understand what the long-term growth is like based on the sales perspective and EBIT perspective, and we are looking at it from a 5-year perspective, right? The third factor we are looking at is the capital structure of the company. Now for the capital structure of the company, we are looking at how much debt is in the company, and what is the debt serviceability ratios looking like, and in these contexts. So now for hint rectifiers, it is not really looking good from a growth and a capital structure perspective, but management risk is somewhat okay. So overall coming to an average score for the quality dot. The second dot is the valuation, right? Now valuation may be one of the most common, commonly is very popular term actually. So a lot of people will ask valuation kya hai, company ka and whatnot, right? So we have kept it simple for everyone here. Basically, we've given price bands for the entire price, and we'll tell you what is the valuation. It's very attractive, fair, expensive, very expensive, and it is based on relative valuation. So in case I'll dumb it down completely. What we do is we basically check for couple of price multiples or your earnings multiples, and we essentially look at it from what is the industry numbers looking like. So if the industry number is here, and if the specific company's price or earnings multiple is on the upper side, it is we can say it is kind of expensive, right? And you should sell the company. That is we'll get to the second part, but if it is under the benchmark, it essentially means it is low and it is very attractive, so you can basically go and buy the company. Now that is like a generalized version of the relative valuation methodology, but we are not just looking at that. That is one part of it. Then we are also evaluating what the company's valuation has been over the with its own history as well. And the third thing is, it is not a blind assumption that if the company is above the industry average, it's a very expensive company, and if it is under, it's a very cheap company. It is very possible that the company is here on the upper side because it's a very good company and there is a premium that is demanded. It demands that level of premium to be there. The second one, if it is under the benchmark, it could the industry benchmark. It could also mean that the company is it's not really doing well, and the market is really discounting that fact, and hence it is down there. From a price multiples perspective. Now that's the second dot, and from our scorecard, it basically indicates it's a very expensive company. The third dot, right? Now you might have noticed that this is red, and hence this is red, this is yellow, and the management quality dot is also yellow. Now the third dot is the financial trend. Now in the financial trend, we are evaluating the the latest quarterly performance of the company, right? So how it works is, and I'll just show you this chart. So what we do is every time the company publishes a result, within maybe 5 to 10 seconds, we evaluate the entire quarterly performance, and we also immediately tell what are the points that are working and not working for the company. So in the latest June quarter, basically there were 27 points that worked for the company, and these points are like what are the PAT. Now in this case we have three highlights. Quarterly basis, it is at 6.93 crores and it has grown by triple digits. Operating profits to net interest is at a highest at 4.44, right? And what are the 5 points that are not working? And the top two are the debt to equity ratios at highest at 1.09 on a half yearly basis. And similarly, the interest is also grown by 20%, right? So effectively, it comes to a total score of, you're looking at this plus 25 minus 5, coming to a score of 22, right? So this bar chart effectively represents the June quarter and comes out with a score of 22. And previously it had a score of 8, meaning at net, there were only 8 points that effectively worked for the company. Now what we have noticed, so effectively, if you go later, the previous quarters, you'll realize, in the March quarter, basically there was a strong performance by this company with the score of 28. And back here, there was a really strong, one of the best performance, and that was back in the 2019. Anyways, the bar graphs represent the score of the company, the financial trend, and the price represents and the line graph represents the price of the company. So what we have realized and kind of noticed is that oftentimes, when the company starts publishing strong performance consistently, the price eventually starts to, catch up with it, right? Although it's a very generalized term, but this is what we have noticed, right? So this is the third dot, and hence it's green, and it's very positive, and hence it's green. Now the fourth one is technicals. Now technicals, again, a very common, rather a very popular factor that a lot of people look at. A lot of people actually make a decent living, actually very lavish living out of this, where they teach technical analysis courses. I would, just to give a disclaimer on this matter, basically we are not giving you guys intraday calls. Rather, we are evaluating the prices on a weekly and a monthly scale. So it is across the 7 factors. So what we are trying to do here, we are essentially trying to establish the long-term price trend, right? And as you see now, so these are the legends out here. It turned bullish, so it's a green triangle, and turned bearish, it's a red triangle. So if you see right here, the company turned bullish, the green triangle, back in May 2023, right, at the price of 291. And since then, it has done really well for itself, currently trading at 906. So that is a technical dot. Just a moment. Okay. So now, we are evaluating companies based on these 4 factors: quality, valuation, financial trend, and technicals. Now, a lot of people started asking, now the company has great valuation, but the financial trend is not looking good. So how should I interpret it? And based on this very same question, we basically came up with a very very straightforward solution. And that was the Mojo score. In order to remove the level of confusion that a lot of people have, in order to remove the level of confusion that a lot of people have regarding how the interpretation side of things for these 4 dots, we essentially came up with a score. Now all these 4 dots are working together and giving out a score of 70. Now the scale is from 0 to 100, and I think 70 is right at the start of the the buy range, and the strong buy obviously comes in later, right? So once it is above 70 or at 70, it's a buy company, and we also tell you immediately why it's a buy company. So it's a growth in the net profits at 264%. Stock is technically in the bullish range, and it's consistently has returns that are consistent over the last 3 years, right? So now we also know how to research a company. And in case you are you don't have the time to do what I just did, you can basically come up to the dashboard, right? It's right here. If you click on the dashboard, right, if you click on the dashboard, this section will open up and you will get the score and the advice on the company, right? If it's a buy, it's a sell. And I would like to highlight this very clearly. This is not a free feature. I mean, the rest of it you can evaluate, you can see the technicals, the quality valuation. But in case you don't want to do the hard work, this will be effectively, blurred out. I'll just show how it essentially looks on the as an unpaid user of what will look like. In rectifiers, there we go. So basically, as you see, you'll have to just click on this and you'll have to go to the payment gateway and make the payment. And we have a lot of deals going on right now. So take advantage. I think we currently have a deal of on the Mojo on the stock of the week. That's the current deal that I'm getting. We have a lot of, just to give some FYI, we get a lot of deals. We give out a lot of deals, not as good as what we used to give back in the during the anniversary season. But these discounts are essentially always the best way of looking at it. These are like the prices of some of the popular companies that are doing very well. These guys the price always goes up, right? Like, so very, very unlikely to a certain extent, can say that kind of impossible that the prices will fall. So take advantage of the prices that are ongoing. Now I'm getting a flash sale for the stock of the week, where you get one stock every week with target prices. We currently have 9 open, and the performance has, we've received a lot of complaints regarding, the market moves very quickly before, our users get the chance to act on it. So it's very effective to a certain extent. Anyways, back to the webinar. So, these are the 4 dots you can evaluate the company based on. Now, apart from that, we are not just limiting the research to that level. We are also giving you evaluation on a price level. So you can evaluate what the price, you'll get to see what the today's price summary is looking like, what is happening in the market, what is the stock DNA looking like, the returns, what is the market cap, the dividend yield, the price to earnings ratio on a trailing 12 months period, what the fundamentals are looking like, and so on. Basically, as you keep scrolling down, you'll realize our UI is essentially built in such a way that on the left side, the first card that you see is always going to be the summary card. On the right side, you'll have cards that essentially, dive more and more into the data, right? So this is basically where we are at. So now this is the return section, right? Return section, a lot of people make this mistake that it is, returns should be looked at from an isolation basis. Positive returns are great, negative returns are bad, which is fine, which is, it makes sense in its own regard. But ideally speaking, you should always evaluate it from a benchmark perspective. Now, in this case, benchmark is the market that we are choosing and also the sector. Ideally, sector is a bit more appropriate, but market is slightly generalized, but this is how it is. Basically the company in rectifiers in the last 1 year has outperformed by 126% return versus the Sensex of 29% return. Another way of looking at it would be, a lot of people, very conservative people often tend to should benchmark this performance with the FDs that they would normally invest in, right? Like आपके FD में समझो X% मिल रहा है. If obviously that is safer, but if you want to make a bit more money, a lot of people just basically can check कि ठीक है, if I had FD में तो इतना return आ रहा था, you can check the company's performance as well based on that. Anyways, that's a different thing. But yeah, getting back to the webinar, basically you can evaluate the company's performance based on the Sensex versus the Sensex based on multiple time periods. As you can see, 6 months YTD, 10 years. 10 years it's done really well. It is outperformed by 1,600% returns over the last 10 years. So it's one of those very hidden gem companies back then. As you keep scrolling to the right, you'll see a lot more data. Quartiles, very interesting data point, where as it mentions, I'll just give you a small summary. There are like 100 companies in the sector, and what we do is basically rank them based on the highest returns to lowest returns. First quartile being the first 25% for first 25 companies. Second quartile will be the second, the second quartile, third and fourth. And basically we're evaluating the performance, based on the closest peers. Now that is the sector is just an example. In case we are looking at the peers, the closest peers. So in which case on a quarter to date basis, it is in the second quartile. In the previous quarter, it was in the fourth quartile, and second, fourth, it's been doing up and down. So it is an inconsistent performer. Similarly, for an industry level, we are looking this. It is again, it's been in the second quartile for a while, but it also has been in other spots as well, fourth and third. So basically, it's a very interesting data. I think definitely something that you should check out. We also are providing you with some insights regarding the risk-adjusted return perspective. So it is often, again, you should not really look at returns from an isolated basis. For example, now crypto, right? Bitcoin basically gave a lot of crazy generational wealth level returns, right? So is that like the best asset class to invest in? Depends on people, but from a risk-adjusted perspective, it might not be, right? We should really check that out. But basically, although it has given so much returns, the level of volatility that comes along with it, hence the risk part of it, it needs to be considered. So we're looking at the risk-adjusted returns versus Sensex, and it is a company that gives high risk and high return. And it's a high beta stock. Sensitivity to the market is very high, right? Second section is the news and the updates. You get to see all the news that is coming on regarding the company and the corporate actions that are associated with it, right? There are no upcoming board meetings. Dividend is at 60%. If there is any split that is coming in or has happened in the past, what were they and what are the ex dates, bonus, rights, whatever. You can click on full details, get a complete breakdown of the entire data that I just mentioned. Now, since these are some really old record dates, so it's not just if there is a split or bonus that is coming in board meetings, it will be highlighted here, and obviously it will be highlighted in their respective sections. Right now, for all my CA friends out there who like to, just dive into the data, we have not missed you. We have the quarterly results, half yearly, 9 months, annual P&L, balance sheet, cash flows, all of it out there available for you to evaluate the data. Again, the left card is the summary card, the right card is basically a deeper insights on each of these data points and what the numbers have been on a QOQ basis, right? The shareholding, right? Obviously, the financials don't stop there. I just spoke about the quarterly data. Shareholding, again, a very interesting, simple yet effective data point. Tells you who's holding the company, who are the top shareholders of the company. And we can see that majority of it is held by non-institutions, followed by promoters. DIIs really don't hold much of it, and FIIs hold 5.82% of the company, right? And at the end, we will have a compare section where we are evaluating the company's dots, right? The quality dot, the valuation, the financial trend score with the peers, because as usual, looking at an investment investment should not be viewed on an isolated basis. It should be always compared, right? So this is basically how you research a company at MarketsMojo and kind of jump deeper and dive deeper and deeper into the data if you want to. And we are not short on data, but in case you don't have the time to do it, you don't have time to research, you can always come to the dashboard and get a summarized version of the data. It will tell you if it's a buy rated company, and it will also give you a Mojo score and also the why you need to buy, why the company is a buy rated or a sell rated company. Hit on the download button and you will also get a verdict report, which is again something that we are kind of proud of. The time is 7:29 right now, and based on the hit that we just did, it's downloading a report now and generating it on a real-time basis. There we go. The report has been downloaded, the time is 7:29, and the report is generated as of right now. Now the markets are closed, so there won't be any much changes to this. So the company, it will basically give you a highlight about what is happening with the company. The first page will tell you about the score, why it's a buy rated, if it's from a returns perspective, and so on. And later on, the entire data becomes completely dynamic depending on each and every company. Now, in this case, with a growth of in the net profit of X%, the company is declared very positive. So this is going to be very different for different companies, right? So getting back to it, now this is basically evaluating companies on an individual level. Now you can do this for your companies of your choice. You can do the hard work, or you can take the easy way out, which is you can kind of subscribe for on our platform and get access to the score. That is available right here, and also the translation of the score if it is a buy or a sell. We have, I think, if you can just go to the. Now I am a paid subscriber. In case you will have a premium service written right here, or extend now. Click on it, and you will see the latest deals that are available for you. I will. You can also get the latest access to the latest offers on our platform under the webinar link. I think we'll have that link available. So do check it out, and I'll continue. Right. So now we have. We have figured out how to evaluate companies on an isolation level, on individual level. Now, next is, we have 4 strategies in place. So now let's just go with the Mojo stocks. Now, Mojo stocks basically it represents the top 1% of the entire market out there. So it's the handpicked top 1% of stocks out there. So basically, now this is the top 10 companies out there so you will see the company name, the score, the amount of returns that they have generated versus the benchmark versus again another benchmark, which is the sector, and you always have an option of adding it to your watch list or your portfolio. So these are multiple such picks that we have available, and if you click on full list, you'll see, as this is one of our oldest offerings that we had available. We had the oldest offerings available. These are, this has a decent amount of history along with it. So as you can see, the white stripe represents a company that is removed from the list, and the black one represents, the companies that are currently active, right? Currently listed. So, we have company trend, which has been in the list since 2023. So it's been more than 13 months since it's been the list, and the returns, it's done very well for itself. Mastech was part of the list back in 2020 and has exited back in 2022, and has significantly outperformed the benchmark by more than 440 odd %. Similarly, our list doesn't end here. If you keep scrolling down, you will see the entire list of companies that we had given, as advice, was part of the basically Mojo stocks. And this list keeps on going and going. And as I mentioned, there has been a significant, this product has been there for, we've just completed our 10 years. So it's been there for almost, 8 to 9 years now. So there is a decent history, and we are very transparent in that sense. So it is not just cherry picking. So you'll also, find companies that have given some negative returns as well. And, we are not perfect all the time. So, whenever we do find some negative performers, we often tend to cut our losses very quickly, right? So I think if you just keep scrolling down, you'll see some more negative ones. But the best part about it is we don't let it go on a higher scale. We stop it very quickly, right? Anyways, so this is the top, 1% the Mojo stocks that is available. Again, this is a very much a paid feature. So in case you want to get access to it, you'll have to subscribe to get access. In case you are a paid user, you will get, notification on this bell icon right here, on an email, push notification that a company has been added to the, to the Mojo stocks list, and to the other 3 strategies as well, which I will explain you. Hidden turnarounds represent the list. It's basically the list of companies that are just about to turn around, and hence these guys will have slightly low rating, but they have a high potential to turn around. So a very oversimplified version of this would be a company in this list would be a company who has given a streak of consecutive negative performance, and post that entire series of performance, it is later on given a strong quarterly performance. So, so that will be part of this list. I mean, that is a simplification of it, but again, it has done very, this is another company. If you can come here, you will see the entire, if you click on full list, you'll see all the companies that have been in part of this list and the performance, and how long they have been and if they are still in the list or not, right? Similarly goes for reliable performers and momentum now. I'll get to momentum now, but reliable performers, as the description mentions, they're companies that are best in their class, growth, and as it suggests, it is relatively slightly conservative from a hidden turnaround perspective, because hidden turnaround is really aggressive for aggressive people. Reliable is basically slightly more conservative from that approach, right? You have momentum now stocks. Now these are, as it indicates, is basically trying to catch best momentum stocks in any market phase. Again, if you click on the full list, you'll be able to see all the companies that have been in the list and the performance that they have generated so far. Now the list is small because it's a fairly new strategy, and compared to the Mojo stocks, and hence the list is not very wide. But again, all these 4 strategies is available only for our paid subscribers. So just take advantage of the latest offering that you have in place. You might see banners just like this. Now this is stock of the week. We get each call one stock every week with a target price. You don't have this here, but you get this with the target price. We currently have 9 calls that are open, so don't miss out. You can unlock it now at 7,999, and just to give you an update, this will not stay the same, and the prices are likely for the stock of the week are likely going to go up, eventually. So just take advantage while you still can. Now it is valid for me for 2 hours. So post the 3rd hour, if I click on this, which will be very unlikely that you'll see this, but if you do click on this, it will take you to it will basically tell you that the offer is no longer valid and you'll have to pay the full price. Okay. So now we have spoken about the 4, the how to research a company, and the second thing is about the 4 strategies that we have in place. Right. Now let's talk about the model portfolio. Right. Now often what I've noticed is that a lot of investors often tend to buy companies, and they fall prey to the third biggest bias. I spoke about FOMO, I spoke about confirmation bias in the beginning. Now this is one of the third bias that I'm going to talk about is the big bias of holding on to your losers for far too long, and getting rid of your winners very quickly. So I'll get to the solution to that bias, and that is a model portfolio. Let me just give me a moment. Right. So at the moment, a lot of people basically research for a bunch of companies. Once they get an idea कि ठीक है मेरे को भी ये 5-6 companies मिल गए, इस पे invest कर दूंगा मैं. People often tend to make their mistake right there as to they just invest blindly. They don't really consider the element of a portfolio approach, so they lose out on the diversification benefits that comes along the way, and they often take more risk for which they won't even be rewarded for, right? Which diversification solves. Right. So and once that this is a mistake number 1. Mistake number 2 is what the people do is once they do invest, they will hold on to their they'll hold on to their initial investments. I will never update it. They'll say that ठीक है अभी खरीद लिया, research कर दिया है, and that's it. They'll not really update their entire views, which is also another problem, because companies are posting their quarterly performance on a quarterly basis, and the fundamentals are not going to remain the same. If a company is strong today, it's very possible that the company won't be strong in the next 2-3 quarters. It happens. Markets are very dynamic organisms, so it's never going to be static, right? So taking that into consideration, people don't take that into consideration, and hence they really don't update their views, and they just stick with what they had bought maybe a long time ago, and just go with the idea that हम buy and hold करेंगे and वो चलता रहेगा. Often again another mistake, another bias that people make fall prey to. So the entire problem is resolved by updating the entire process. So the entire process basically the entire process basically starts with you identifying the list of companies. Then people stop here, and then you have to evaluate, the more views on the companies that you hold, and you have to basically, if there is a company that is bad, you have to start evaluating the alternatives and sell those companies, which into a better one. And that cycle continues, and that is accomplished by our model portfolio. And so it takes advantage of the portfolio approach, and also is it is always constantly updated. So I will just kind of take you through it. So you can access this platform by just hovering over the portfolio section, go to the model portfolio, hit the enter the amount. The amount, let's say, is 5 lakhs, right? We have a minimum investment of 1 lakh, but I'll just go with 5 lakhs. Second step, I'll choose a risk profile. Risk profile, very simplify. I'll simplify it for you guys. It is telling you how much amount of risk I can take. So, there are a lot of questionnaires that are available out there that helps you identify what kind of risk profile you could potentially have. In this case, let's say I choose aggressive. I'm a young person. My retirement is a long time later, maybe 30 years, 40 years down the line. So I have a lot of time. My objective, I'll have to use the money I invest now 40 years later. So I have enough time to lose it all and bring it back up again. Right. Second thing is, I'm not going to use this money anytime soon. So the level of volatility is fine. I can adjust to it. So if so that is one way to identifying your risk profile, the objective behind the money that you're putting in. It is very possible that, you could have multiple goals, right? One is retirement, second is, like a child's education and, vacation. It could be whatever, it could be buying a phone. So, each of your goals could have different profiles, depending on, how soon you might need the money and, and how critical the goal is, right? You can't push retirement forever, right? So you can't really, so once you're closing into your retirement age and obviously once you retire, you'll not have any money coming in, you can't be taking an aggressive call. So I will no longer, risk profiles also tend to change. I'll no longer be an aggressive profile. I'll no longer have an aggressive profile. Then I will, transition to a conservative one. And in case I stick around with the aggressive one and, something bad happens, right? The market takes a fall. COVID happened, unfortunate for a lot of people who were close to their retirement age. Then, had to unfortunately either postpone their retirement or increase the number of SIPs that we're putting in to, come back to that level. So that's a little bit about risk profile. So I am an aggressive person. So I just click that. I have read and understood the disclaimer. I generate the model portfolio. And now it is basically understanding what are the top companies that are available in the market right now. It is then accordingly, so it's not just giving you a list, it is then accordingly creating a proper allocation amongst the 10 to 12 companies. Yeah, 10 companies across 8 sectors. Highest is IT sector. All of the companies have good quality. Remember, these are dots that I was referring to. 100% have better financial trend, mildly bullish technical trend, and that's it. And this is basically, most of it is going towards large cap, and there is no micro cap or small cap allocation. And this is the sector split that we are referring to here. Now that 5 lakh essentially split amongst all these 10 companies. And the best part about it is we are not just giving you the list of companies, rather the quantity as well. So, and translating to a value. Now, given that, now you can hit continue. Given that we are not really a broker, you'll basically have to, this is a deal sheet that we create for you, and you can basically have this executed with your broker, either online, offline, really your choice. Click on OK, right? And basically you get access to the entire model portfolio that you have available. You will also see the quantity that you hold. Basically now, if I do create it now, I obviously can't execute it. I can't execute it now because the markets are closed. So basically, I'll have to just make sure that the orders go in tomorrow morning. The portfolio has a score of 92. I have some cash in hand. The performance will be reviewed here. Tomorrow, the numbers will start coming in, and that's how it works. Now, if I want to add investment, I can click here, reduce, and whatnot. Now, the journey doesn't end here. We have given you the list, but we are monitoring all of these investments. So in case some of these deteriorate, we'll tell you, okay, let's say India Mart is, the score is falling and it's gone down below the rating has fallen down, we'll tell okay, it's not no longer a better company. You can switch, not sell. You can switch into a better company. And that's how the entire model portfolio works. The entire cycle is completed. So it is not just you get a list of companies, you buy it, you also get a list of companies, how much to buy. So you have the diversification benefit that comes along with it. And then accordingly, you all also know when to sell the company, keep it updated, and the cycle keeps on continuing. That's honestly my personal way of doing it when it comes to investing. And the entire investment journey doesn't end, right? Unfortunately, a lot of people stop it once they do an effort. That's it. But we make sure that the entire journey continues seamlessly for you. All you have to do is just stay updated for what kind of advices that will be generated for your portfolio. You'll again get it on the bell icon. Second, you'll get it on the email, and third is you'll get it in the mobile app if in case you have it. Again, this is a paid feature, so if you can, I think if you can take advantage of the deals that we have right now. This is the stock of the week deal. Again, I mean the deal for model portfolio will be separate. You can just go and you'll have your deals that will be aligned on the banners right here. So take advantage while you still can. In case you have a sale going on, take advantage. We have sales going on, but again, take advantage. Prices are not never going to fall. Rather, it will always, like the markets right now, are always going to keep going higher and higher. Anyways, that's it for today. We've talking about how to research a company. We've spoken about the 4 strategies that we have in place. We'll do the Q&A. I'll just recapping now. So how to research a company, the 4 strategies, and the model portfolio. I hope you can taken some value out of this. And in case let's just do the Q&A session, Aman, and let's just tackle some questions. Mr. Manish, just a moment. Apologies. Mr. Manish, hello Mojo team. I'm holding the Diwali portfolio from last Diwali. I skipped last few months webinar where you provide latest updates. I attended last Monday webinar where I got the latest Diwali stocks, but I don't have the weightage for each stock. Could you please provide the stock price weightage amount for Diwali FPF? Okay, so sir, this data I currently obviously don't have it on me. What you could do is you can just shoot me an email at kevin@marketsmojo.com, and I can probably help you out with this. This data you'll always find in the Monday webinars. It's the latest editions done by Prashant. So you can either attend the latest one, or you can just shoot me an email. In case we can give that info out, we will. So my email ID is Kevin, KEVIN @marketsmojo.com. So shoot me an email. I'll give a reward to you. Next question. William Charles, question from you, sir. While Nifty and index is in an uptrend, small caps and mid caps are stagnant. What is your view on this? Thank you. Sir, I wouldn't, I'm a very neutral person, sir. I wouldn't really have any view on, small caps and mid caps. I would say the markets are really having some momentum going on, and, there is, decent amount of inflows that is coming in. So, I honestly really won't have any view on this. So, that's about it. And I'm sorry, I could not really answer this question. You can, however, shoot me an email at kevin@marketsmojo.com, Mr. William. If maybe elaborate more on this question, maybe that will be helpful. Next question. Tushar is from Mr. Tushar. Perfect. Kevin, please enable a screener to sort companies solely based on ROE and ROCE and okay. Okay. Can we get back the screen? Great. So I missed the name. You can just go to the screener section. I think go to the expert section, and I think it will be in the quality factors. Just a moment. I think the there we go, management quality factors. So so what you have to do is go to the Mojo expert screener. I think this is a slightly detailed out version of the entire screener feature. Where you basically have very high flexibility. Go to the ROE section of the management quality factors. You can click on 5-year average. Ideally, that's the way to go. And ROCE in case non-banks, again 5 years. And I think all of these are being added here. You can select the kind of average you are looking at. Let's say the average is 20%. Again, let's go with I'm so sorry. Let's go with 1 to 35%. And obviously I have a few other things that are already up here. Let's remove the returns. This is also fine. Previous quarter. Let's go with the latest quarterly trend being outstanding, very positive. Results, let's move this. Quality being excellent, good. Management, your your ROE 5-year average being 1 to 20%, and your ROCE being at 1 to 34%. But the analysis, let's see, we already have a list of 105 companies. So that's how you can do it, sir. So I think even ROA may be possible. There we go. You can also do it on an ROA basis as well. Right. Click on the either latest or 5-year average. I'll just go with the 5-year average. Choose the range that you want, and you can just figure it out. Okay. I hope that was that answered that question. Anything else that we have? Let's take it. Mr. IM. Okay. It's unfair to Mojo One customers that I have to do the KYC just to view the MF ratings. If I have a premium subscription, if I am using other brokerage or directly investing with mutual funds, why do I need KYC? I'm already paying for the mutual fund rating. Already you have kept me out of the weekly stock picks even though promised all future upgrades. Okay, so first off, sir, I'll address the weekly stock picks. Sir, I think once we were launching Mojo One, I think it's on the tapes as well, is that we had very clearly mentioned that stock of the week will not be available, will not be included in the Mojo One package, and hence, you can just go check the tapes, sir. We're a very transparent, very honest company, sir. So we do definitely are not misleading you here. But obviously it's your, you can go and check the tapes that we did once we launched Mojo One. We had a slide that was very evidently available, highlighted that not the stock of the week which will be coming in, which we just recently launched, will not be part of the Mojo One package. Regarding the MF rating, sir, I will not be able to answer that question appropriately, but you can shoot me an email. I can appropriately connect you to our mutual fund team, and they'll be able to assist you on this query. Next question. Mr. Ravindra, please, is it better if all the speakers speak in Hindi? No problem, sir. Feedback noted. हिंदी में बात कर लेंगे. That's not a problem. Problem नहीं है. That's feedback noted, sir. Thank you. Anything else? So, Mr. Shyam Dasari. Good evening, sir. Dear Kevin, why no valuation snapshots are being shown in some stocks while in some stocks financial trend graphs are not being shown, while in some stocks the score is not being shown? Why is this the case? Please clarify. These are including all these in every stock would be extremely correct. Okay, and completely understandable question, sir. Very good question, actually. Mr. Shyam, see, here's how it works. As I mentioned, it's called completely quant-based. So, meaning now for the quality dot, right? For the quality dot, it is looking, as I mentioned, it's looking at the long-term fundamental strength, which is 5 years, right? If the company has not been listed for that long, the data is not available, and hence we will not be able to provide you a score, the dot factor right there. Sometimes the companies might have, so that is one set. So it is coming to the root of the problem that you're highlighting. If the data is not available if there is not enough data history, we'll not be able to give you certain data points. Now, Technicals also, again, as I mentioned, we're looking at from a weekly and a monthly standpoint, and hence, if the company has just been listed, that point also will not be available. So some history is required. Now, for some companies, we also don't give the score out. Now, these companies very likely are going to be companies that are really small. Like I'm talking about companies that have just been listed, and the numbers that they're reporting are very small. So, in which case, a jump of 1 crore to 2 crore growth will be it'll be a very significant growth, and hence might skew our analysis, right? So we have some of these filters out there to remove outliers that might just to remove the outliers. So that's how it is. So essentially, long story short, sir, basically, agar data nahi hai hamare paas to process this, and we need data, obviously it will not be available out there. So that's the entire logic behind it. Mr. Gunjal, I have a choice of companies named Trent with strong buy of 82 and is 13 months old, and Trip Industry with strong buy score of 82 having recommended one bag. Which one should I prefer for better returns? So really your call, sir. The way we interpret this is, so okay, maybe I'll address another big question with this. A lot of people have asked कि यार आपके इसमें why don't you guys give us like an entry price, what is up with that for these strategies? So our basic concept here is that if the company is a strong buy or a buy, you can still buy it, right? There is no point of an entry price there. If the company is a sell rated, you're not going to wait for kab bechna hai. If it's sell rated, you're going to sell it. If it's a buy rated, you're going to buy it. So in both of these cases, sir, the company, although Trent has been there for 13 months, who's to say that it's not going to be there for another 13 months? Right? Similarly, Trip Industries company has just been in part of the list, but it is also possible that the score might fall maybe in the next couple of quarters, and it might not be there anymore. So at this point, sir, I would say both the companies are good to enter now, but you can, if you want to kind of get an edge or get the extra edge over, you can basically dive into the data, maybe perhaps understand about the company, which is available in the company CV section, the stocks page, and take a call by yourself. But basically, both of these companies are kind of indifferent right now. Next question. Oh, that's it. So I guess that's it. Again, really good series of questions that I had. I unfortunately could not answer some of them. In which case, please shoot me an email at kevin@marketsmojo.com. I will either connect you to the right people, or in case I can answer it, I'll do it by myself. So take advantage of the entire features that I just spoke about. How to research a company, the model portfolio, very interesting way of investing, and the 4 strategies: Mojo stocks, the hidden turnaround strategies, momentum, now reliable performance. All of these being paid services. So in case you want to take advantage, get powered by MarketsMojo on all these fronts. We have deals going on a daily basis. Sometimes we don't even have deals on a weekly basis. So if there is a deal available for you on email or on on the website, you will see these banners out there. I mean, even on the the webinar link below, I think there should be some links available. So in case there are available out there, take advantage. And just like the markets are running, the prices are just going to get higher and higher. Yeah, that's it. So I think next week we'll talk about the portfolio analyzer, optimizer, and stock of the week maybe, and the stock of the month. Let's see what the docket says. And till then, good luck in the markets. Take advantage of the services that we have, and good luck to you and Godspeed.